Hello traders, many new updates have come to Hyblockcapital, so I am proud to show you guys some of the indicators that I have never seen before. Alright, obligatory for me to say I will try to keep this video under 10 minutes. I will probably fail that, but you can look at how long this video is to see if I succeeded or failed in that. Okay, so I found that Hyblock has added just a bunch of different indicators, some of which I never even thought of, and that's why we're doing this video. So the first thing is that the site's been better organized, I would say. So we have liquidations all over. Oh, not trying to click that. Long and short data from every single exchange that has it. I mean, all in one place, you can get anything really you want at this point. Like literally everything. One of my favorites, I'm just going to show. Where's the average leverage used? Sentiment. Oh, okay, here it is. You can see how much people are making on BitMEX, even though BitMEX isn't really as popular, anymore. Liquidity. Oh, here we go. Top traders average leverage used. Yeah, this one's always really fun for me. Just like throw it up there. And then the other one that I want to show, there's just so many different ones, but the limit order count. So what this is going to show is across multiple exchanges, how many limit orders are being filled. Not how many limit orders are being placed, but how many limit orders have been filled in a given time period. I'm going to click this twice because one of these is going to be for sells. This guy will be because it's, red. And the other one will be for buys. Let's just do FTX and Binance. I don't really hate all the other exchanges, but obviously these two are the kingpins. I mean, people are going to probably comment, oh, Bybit, don't forget about them. But these two are like my bread and butter, as you guys probably know. FTX is probably the best exchange out there. I mean, I think that is becoming increasingly apparent. Oh, wait, one more. Okay, I know, this is too much fun for me. Way too much fun. I have one more promise. Well, kind of promise, but open interest aggregated. All right, so where do we even begin? Where do we even begin here? Because there's so much to show. Some of these are not new. These two are really new, but these two, you guys have probably seen it before. But anyway, I'm going to give a quick explanation. So red is shorts, green is longs. So when this rises, that means that the amount of leverage that the top 20% of traders are using is increasing. And when this drops, that means that the amount of leverage that they're using is decreasing. And you can see the amount of leverage in these values here in red and green, and then also on the axis here. So you can see spots where, oh yeah, this is a really good one. Longs were getting more risky. So what was happening here is that the shorts were actually getting de-risked and the longs were getting extra risky. So typically when this occurs, you might say, well, how does this help me in my trading? I wouldn't use this as directly like an indicator of sentiment of is price going to fall or is price going to rise? What I would do instead is say, we have a lot of not new traders. We have a lot of traders who are using a lot of leverage in one direction. Because of that, I think that if price goes down here, it's probably going to wick a lot of people and liquidate a fair amount. So you can look at how much risk is being used to see how much volatility you think that there will, occur. Now here, this doesn't really prove my point that well, but I mean, it kind of does. We can see big volume spike here and a big volume spike here. Why do we see those sell spikes? Probably because the longs were getting extra risky, as you can kind of see. And then you can see how the risk that the longs have been taking kind of just petered out. And the risk that the shorts took kind of increased. And the reason for that was probably that this was chopping them to pieces. I don't know how much of a percent fall that this was, but enough to liquidate probably anyone over like 60 times leverage by my math, using the percent lick to, yeah. And then you can see here again, just lots of risk being used. And if we want to get like absolutely crazy and go to the 1 hour, you can see here like actually really good times when people were just using way too much risk one way or the other. Here was a great example. The longs were so risk on that they really had to be shaken out. And that's the kind of scenario that I like to look for. One side uses way too much risk. I want to wait until they get shaken out until I enter into a position on their side. So if I see the shorts are taking too much risk, then, I don't really want to short here. That would be idiotic because why would I want to short if there's a lot of other over-leveraged people on my side? That seems like a terrible idea. What I would rather do is if I'm going to short like at all, I'm going to want to wait until longs begin taking a lot more risk, which means that there's going to be a lot more liquidation potential and potential for them to get kind of hunted down. All right, second thing I'm going to show before we introduce the new indicator. Open interest delta. I know I talk about this indicator in like every video. Actually, every video I talk about open interest, but I cannot stress enough for speculative trading, you got to pay attention to open interest. And specifically what open interest shows me personally, and this is what I wrote about and talked about in my trader course, is trap traders. When we see just a massive increase in open interest, that typically tells me there's potential for a lot of trap traders. So case in point here, this is the open interest delta. This is going to be in any 1 minute candle or 1 hour or whatever you want the time period to be, how many new contracts are entering and how many new contracts are getting out. And here we had 20 million delta of open interest right here. So we have just so many new positions being entered here. And when you see a massive spike in open interest, typically that acts as resistance in the future, or price uses that as a reversal point. What happened here? Well, price continued to go down until we have a massive open interest fall. So price went down about enough to liquidate, like I'd say anyone over 25x eventually, maybe like 30x. But yeah, and you can see kind of other points of where open interest massively increases. And typically what happens is price has a harder time going beyond that point in the future. Case in point here, we have a 20 mil, 19.82 mil increase right here in open interest, right about here. And we have an 8 mil here. Right at these two candles, what do we see? It's as simple as this. What we see is a lot of people entering here. What does that mean? That means that if price was to come down, it's going to have to work a little bit harder to get past this point. And it kind of has. We have this one, failed, went back up. We have this one, failed and went back up because there's a fair amount of people who are trapped here. How do I know that? Well, if there's an increase here, which we see of about $28 million worth of contracts, half of them are long, half of them are short. Not half of the people are long and half of the people are short, but of this contract makeup, I know for a fact that 28 million USD long and 28 million USD short have now entered. So anyone who shorted here, the $28 million worth of shorts here, I mean, if they're alive, they're trapped. Unless they added to their position, they actually like shorted here and then added here. But if they're just newbies or people who are just entering, they just got trapped here, which means it's a little bit tougher for price to breach that. That's open interest delta. You can see just a million examples of massive delta loss as typically a sign that price can reverse. But I don't like that as much as I like looking for trap traders. That's like really my bread and butter, to be honest, to see when price reverses from a point of a lot of open interest, typically that point acts as resistance or support. I mean, this is just something that's going to happen time and time again because of people getting trapped. I mean, it's just part of how the market works. So yeah, so I can show you guys that on the 1 hour, but I don't think I'm going to get like amazing things to show you. Oh, actually I am. Let's get out my handy dandy. Oh yeah, this is definitely a case in point. Look at that. We have 250 mil coming in contracts, 274. We have almost $1 billion worth of new money coming in. And that's a fact because open interest is rising. So let's go designate where was that occurring. Well, that was occurring here. Why is that important to me? Well, that's important to me because price rose past that. And then after price rose past that, watch just how hard it was for price to go below that. It was like not impossible, but it was near impossible. 3 times it tried. It went down here, couldn't make it. I mean, there's $1 billion worth of shorts here. Like, I mean, or maybe like 800 mil. There's like 800 mil worth of shorts here. Obviously, price is going to have a hard time coming down. It tries here. It tries again here. Then it goes a little bit lower, probably to liquidate some longs or stop them out. But we just can't get price to go any lower here. And the reason for this is incredibly sinister. But it's the fact that a massive buildup of trapped traders is what fuels a trend to not touch that point until it liquidates the other side, until it liquidates the people that are trapped. So to slow down and kind of explain what that means, if we see this 800, 900 mil worth of trapped shorts and also profitable longs, typically what happens time and time again on Bitcoin is price is going to then wait till it liquidates all those shorts. And then after it liquidates all those shorts, that's when you dump. Because after all these trapped guys have been killed, what happens? Well, that means that there's less support for price to fall to. Because if all these guys are still alive, yeah, that's not good for the shorts. Because if these guys are still alive, what that means is that if price goes back down to that 50K level or 50 to 52K level, it's going to have a hard time falling because there's a lot of interest in exiting that at break even or slight profit in those shorts. So that's the kind of mindset you have to have, not the mindset of like, what's my best indicator or, RSI MACD. No, don't. I would not recommend thinking like that. I'd recommend more thinking of this like a poker game and thinking, who are the suckers? How do I take advantage of the suckers? If you can think like that and have good risk management, I mean, world is yours. Okay, so let's move on. I'm like slowly whittling down the indicators here. This one, I have to be honest, I don't fully know how to use it. I also don't fully know how to interpret it, but I will try. I've never seen something like this before, but this is basically telling me how many bids or offers have been filled. Now, again, I'm not 100% confident on this, but I'm reasonably confident. It's kind of weird, but this tells me how many bids have been filled, and this tells me how many offers have been filled. So what we can see here is after price fell a lot, we got actually 6.315K individual limit bids, limit buys filled. And if I wanted to get crazy, I could, click every single other one, but I don't really feel like it. And you can see here, we can see where a lot of offers get filled. Here we actually had 3.326K different offers being filled, but 1.564K bids being filled. So typically what I'm going to use this as is a barometer for, for a few things. There's two ways you can view this. I would say one for trend strength to see how aggressive are the sellers or the buyers. And then the other is just simple reversals. When you see a massive amount of one side filled, almost always within a short period of time, the price goes the other way. And that's because supply doesn't last forever, demand doesn't last forever. So if we get let's say a very strong demand run where price begins to rise and fill a bunch of offers, that's not sustainable to occur in perpetuity, because there are longs who want to take profit. There are shorts who want to enter. And then there's also drying up of buying potential. I mean, people aren't going to buy forever. And if you have the mindset that prices are just going to keep getting bought up, then that's how you probably are going to get trapped at the top. So what you want to do instead is look at this, and you could say, well, what I want to see is, and what I'm looking out for is an overabundance of strength is actually kind of weakness, because way too much buying into offers might seem good because you're making more money in any long trade that you're in, but at the end of the day, it's not always great, because that can mean that the demand has kind of been washed up. Everyone's already bought. And if everyone's already bought, then that's not a good thing. Here is just a classic example of trend strength. You can see that we have 10K limit order, 10K offers filled between Binance and FTX, and this is just clear trend strength. You probably are at this point wondering, well, how can I tell if it's trend strength versus a reversal candle? Well, I would say that's kind of hard, but let's go to the 5-minute and do our best to try to use that for this. Okay. The first thing that maybe you could do if you want to do that, I was thinking of making this total. And actually, you know what? Oops, sorry guys. You know what I'm actually going to do? I know this is probably going to be a really gross graph now, but I'm just going to throw everyone on board here. All right, let's just mark every single exchange. I didn't really want to, but I want the data. And this is really every single major derivatives exchange. And now we have just a bunch more data. And now if we go back to the 1 minute, I think we can potentially make better sense of this. Oh yeah, this is exactly what I wanted to see for reversal, exactly. So here, what do we see? Well, here we actually see a beautiful reversal candle, because we see 11K bids have been filled. 11K different bids have been filled here. And this is actually the market low. This is just an overabundance of selling strength. Same thing happened here. And I have to be brutally honest and say that I wouldn't pick this indicator to be is this trend strength or is this a reversal? I don't think that this is going to be a great indicator for that, but I do think that this will probably work better than a volume spike strategy, because volume doesn't really spike here, relative to other patterns. But what we do see is we can see how many individual people are getting filled. And if too much of one side's getting filled here, all the bids, that's when price kind of has a harder time falling, because everyone who wanted to market sell potentially has already sold. Another example is here with the market low. We get the same exact pattern of just a fair amount of of bids being filled. 16.8 thousand bids have been filled in 1 minute across multiple derivatives exchanges. And I would say, if anything, that's typically going to be quite bullish. So that is another indicator that you can use that has been brought to my attention. All right, let's see if there's others. Oh, yeah. This one's interesting. The leaderboard notional profits. We can see, I don't really talk about BitMEX much anymore, and nor do others. They're kind of like fading away, if anything. But I think that this is still interesting to show, because this can show you the collective profit of traders who post their positions. I wouldn't give this too much. Yeah, I probably wouldn't like look into this too much, but it still is interesting, to see from time to time. Let's see if leaderboard ROE profit. Oh no, that's not my favorite. Not everything will be your favorite. Oops. Yeah, here there's just so much you can look at. Oops. And net longs and net shorts is something I've always wanted to see here. What these are, guys, is this is a combination of open interest and market order data. So you can basically see here where are a lot of longs entering and where are a lot of shorts entering based on open interest with price. So a pretty beautiful example of that, I would say, would be something like here, where we see that just a bunch of longs entered, 2.23 mil on BitMEX, and we have 1.3 mil worth of net shorts entering, i.e. market order and entrance. And why this is important is because this spot potentially became a trapped area because price wasn't able to breach it. Maybe I'm reading too much into it, but to me, this is also another indicator to definitely look out for. And then there is, where is it? Liquidity. There is everyone's really favorite indicator that they always want me to use, which is, these guys. And hopefully my PC doesn't like crap. Okay. Yeah, that's the issue. Okay, that's a little too zoomed out for my liking. Yeah, that's like crazy zoomed out. Yeah, you can change that to be like less zoomed out, but potential liquidations are always gonna be great. Like this guy, you're not gonna like crazy zoom me out, are you? Oh yeah, you are. You can still see where some liquidations get filled at like literally near the perfect prices, as it typically does, but like that was just a little too zoomed out for my favor, even though I could probably change the auto scale and go from there. All right, let's see what else I want to talk about. Yeah, also market order average size is interesting. Market order count. I'm actually gonna do market order count because this is another thing that can really reveal a lot. So what this is going to show us is how many individual market buy orders there have. And this is really going to be a representation of demand, even though this isn't really factoring in size. For me, I would say that a higher count probably is going to lead to more bullishness, and if there's like a high sell count, that would probably lead to more bearishness. And if you want just a good volume spike indicator, then you could probably use total and go from there. But basically, I wanted to make this video to spread some love back to Hyblock. They're putting in just so much time at getting like new indicators that I've never seen before that I find pretty cool. So personally, I will be using this more in the future. And if you're interested in getting my passive income course through Delta Neutral, you can click the link in the description below. Also, my trader course that covers more of what we're talking about here is going to be linked in the description below as well. Yeah, and I'm also going to link my referral code for Hyblock as well if you guys want to go give them some love. I failed to make this video in 10 minutes, but I think it was worth the while. We talked about open interest, looking for trap traders. We talked about average leveraged views and risk on, risk off to see who's taking more risk and what's probably going to happen to them. Hint, they typically get destroyed or wrecked. And then we also looked at how many limit orders are being filled to gauge supply and demand in the market. If you can really understand these three, then I think you're going to have a pretty good gauge for how strong the buyers and how strong the sellers are. And then also, you're going to have an ability to hopefully predict where other people are going to buy and predict where other people are sell. And my quick like one sentence way of doing that would probably be, if you want to find a spot where you think a lot of people are going to likely buy, well then look for trap shorts. Look for a large open interest increase. Look for like a $2 billion area where where $2 billion of open interest has just increased in a range, price goes above that range, you know for a near fact that when price goes back down to that range, and let's say those shorts haven't been liquidated, what's going to probably end up happening is that it's going to be hard for price to fall because there's so much interest from those shorts who are trapped, and they're probably going to want to buy right back up. So there you go. Happy trading. I'll see you guys in the next one.